Biggest issue in trading is people believe that win rate is more important than risk to reward or anything else really in general as a trader. You go on Twitter, you go on Instagram, you see everyone talking about, oh, I have a 80% win rate this week, or Telegram groups and Discords, oh, I have a 90% win rate, or I haven't lost this week. That's really cool. It is really cool to talk about. It's really cool to you know, envision, but is it important in trading? And the quick answer is no. The quick answer is no. It's not important in trading. It's not important to have a good win rate. So let me explain risk to reward. What is risk to reward and how can we use it in our trading? So risk to reward is basically what you're risking in the trade versus the reward that you're going to get if you're right. So let's make a scenario of this. Let's say, for example, I take 10 trades. These 10 trades are going to be with the same exact strategy. And this strategy that I'm using, maybe not the best. Okay. And guys, don't get it confused. Win rate is good. Okay. It's good to have and, it's vital. But this is a story where win rate doesn't really bring into it. So we have 10 trades and it's taken on the same strategy. 9 trades are losses. So 9 trades are losses, and you might be thinking, well, he's just lost his account, right? Well, with the correct risk parameters, you can kind of give yourself a certain amount of trades where you're like controlling your risk. Say, for example, on a $100,000 phase one challenge, you've basically, if you risk 1%, you've basically got 10 trades to lose, right? So if you've got a 50% win rate, you're going to be all right. Okay. So let's say, for example, I'm trading on a $100,000 account. I take 10 trades, 9 of them are losses, and I lose $9,000. I'm $1,000 away from that overall drawdown loss. The last 10th trade is the same strategy, but it hits this time. My risk to reward is maybe a 1 to 10. So after I take the 10th trade, I make $10,000, for example. So I risked $1,000 again to make $10,000. Now the account has gone down from $9,000 loss to being up $1,000 in one trade. Because obviously 10,000 minus 9,000, I'm up 1,000, right? So when I kind of like figured this out, I was kind of saying to myself, well, the strategy is vital for a good win rate. It needs to win a decent amount. Maybe around the 50% area is reasonable. Okay. Anything kind of below that is a bit like, oh, maybe it's not a very good strategy. But around the 50% mark is okay. I recently had an FTMO account that was just testing some things out. I lost $2,000 and made $6,000. So I was risking 1% to make 3%. So I lost one trade and won the other one. That's a 50% win rate, but I'm overall up $4,000. And this made me think the strategy is cool, right? But your risk management is what's really important in trading. I've looked and analyzed through funded accounts. I've looked and analyzed through other traders' funded accounts, and I've seen that the most vital thing in their trading strategy is having a low loss, so a small loss dollar amount, and big wins, and not big wins in regards to $10,000 and $15,000, like $4,000 with maybe a $2,000 loss in the back end, or a $1,000 loss, or whatever it may be. As long as your win is at least 1% over your loss, I think you're fine. Okay, and well, this is an easy concept, right? And a lot of people are like probably watching this video and they're like, well, this is easy. Like I do this all the time. But the problem with this is that one, you bend your rules. So if I went into the markets, right, and I said to myself, I'm trading 1% risk and making 3% reward, and that is all I'm doing. First trade, I lose $1,000. Second trade, I lose $1,000. Okay. And then the third trade is going well. Okay. So what am I going to do? Most traders sit there, oh, I'm going to put my SL to break even. So now the third trade, which was break even, was zero. So now you're down $2,000. So realistically, it doesn't really change your risk to reward, doesn't really change your win rate or anything like that. It kind of just adds an anomaly into your statistics. Let's go for another example. Maybe the fourth trade, we make, we're up $500 and we go, okay, we're going to take a trim with our SL at break even. So I take $500 profit. And then my SL is break even because, oh, I'm not putting risk on the trade anymore. SLBE, okay? So it goes from $500 profit, and then I'm just waiting for an extra 500 or whatever. And my SL's at break even. The trade just takes tumble, hits my SL at break even. So now I have two losses, one break even, one win, and the win is only $500, which is half the amount of one loss that I've had. So I've only made half the amount back from one loss. Okay. So now our net profit or loss is $2,000 minus $500, which is $1,500. So now we have two losses, one break even, one win, with a net loss of $1,500. Okay. But you're still staying at the same risk to reward. You're still risking 1% to make 3%, but you're adding anomalies within the trading. So you're adding SL break even, you're trimming your positions. Maybe you close out because the time's not right or whatever it may be. You get emotional, you see $1,000, oh, that recovers my old loss. No, well, yeah, it did, but you're ruining your statistics because that trade needs to hit its stop loss or its take profit. I don't want you to do anything in between. Okay. I have this one student. She's a brilliant trader. She's really, really good, but her losses are always massively bigger than her wins, right? And the reason is because she thinks as soon as she sees a profit, she wants to take it. And this is the psychology in trading. This comes into your bad habits and things like that. I need you guys to trade like probability wise. So I need you guys to trade in regards to today I'm going to win, tomorrow I might lose. But over those 2 days, I'm going to be profitable. Maybe I lose for the whole week and then maybe I win all next week. I'm going to be profitable in the second week. It's a game of probabilities and it's a game of risk to reward. If you focus on your risk to reward and don't add any anomalies in between, you will be profitable over a period of time if you're a good trader. I genuinely believe people lose in trading and people lose money in trading because they add anomalies into their strategy. They add too many confluences. They add too much technical analysis. They're waiting too long. Just wait for 2, 3, 4 confirmations. Take the trade, put the risk to reward in, and like Alex G says, genuinely set and forget. Set your take profit, set your SL, and forget about it. Don't be up $2,000 after taking a $2,000 loss and think, oh, I can get out a break even, right? Yeah, at times maybe it depends on the context of the trading account, but at times you might need to do that. But over the grand scheme of things, try not to ruin these statistics. If you backtest, for example, and you backtest and you have a 1-4 risk to reward and you're trading over and over and over again, I will show you some examples. So we're going to go through examples on my trading journey. So let's open up, because I'm getting into this video now. Let's open up a new session. Let's say, for example, we have a $100,000 account. And what should our risk be? What should our risk be? Maybe I'll just trade gold, actually. Maybe our risk should be 1-3. Okay. And I'm going to probably skip through in the editing. And then I'm going to go YouTube test. And I'm going to only trade 1-3 risk to reward. And I'm not going to give a shit about what the chart does. I'm just going to I'm not doing technical analysis. I'm just placing trades. Okay. And I'll show you over a period of time, we're going to be profitable. So let's go on to this chart on my trading journey. What do we think here? I kind of want to do it blind, right? I kind of don't want to. Let's go on a 15-minute, for example. I want to do it blind. Let's go for a long position, okay? We'll go for a long position. And what are we risking? We're going to place order. We're going to be risking 1% to make 3%. So our take profit has to be a 1-3. So we're going to put a 1-3 on here. So you can see this risk to reward ratio, 2.99. Try to put that to 3 if we can. There we go. So we're risking 1% to make 3%. We're going to place the order. The order's placed, and then we're going to run through. And guys, I'm going to skip everything in the video. I'm just going to pause that. So it changed the session. So I did make $3,000. So now we're one loss for one win. Okay, cool. So let's take a break and review the data that we just collected. I want you guys to understand that I'm just placing a buy or sell. I don't care what I'm looking at. So we have placed 4 trades. we have a 25% win rate, meaning we profited one trade out of the four, and we are currently break even. If, for example, we increased our risk, maybe we changed our profit target or things like this number would be drastically different, drastically different. But we're sticking to an average R to R of 3. Okay, we're sticking to, we don't care about win rate. Okay, so we're risking $1,000 to make $3,000. We've had one win, so we've had 3 losses. So we've lost $3,000, but that one win has brought us back to break even. Let's carry on. The thing that's also crazy with this is that I'm not trading, right? I'm not actually um like if I have a really good strategy and I'm using this, like I would be like pretty profitable right now. But this is just, I don't care I don't know what's going to happen, right? This is just, and it's also Euro USD, which is annoying. I didn't notice that, but why is it bugged? Okay, so this was the YouTube test. We're going to go on to another test now just because we ran out of data. Okay, so we just open up another one and go again. We were at break even anyway. We were at like $2. So I hope you guys don't hate me. But we're gonna go on to the 15-minute time frame again, and we're gonna have a look. Right, I'm just gonna go straight off the bat, probably a long position. So we'll go long position, place the order, set our TP up here, set our stop loss so the risk to reward is correct. So around 3 there. I'm gonna press place order at the top. 1%. We're looking for a buy. 1%. Yeah, 1 to 3, place order, play the chart out. Okay, this is a vital time. I do it myself. I looked at this chart just now and I went, okay, I'm running out of time. I just looked at this chart just now and I was like, okay, should we take it? But this is where you throw your numbers off. This is where you really throw your numbers off. So I'm going to leave it. If it hits its stop loss, it hits its stop loss. Again, set and forget. So we'll see what it does. We are in decent profit. We're probably up around like 2,500. And we did take our TP there. Okay, there we go. Brilliant. Okay, so now we've took 5 trades. We took 1, 2, 3, 4, and this one was 5, and we've lost $1,000 for the first trade. We made $3,000 for the second trade, lost $1,000, lost $1,000, and then made $3,000. The account is currently up $3,000 with 5 trades and 2 wins. So 3 losses and 2 wins. Okay, so 3 losses and 2 wins. And what does that risk to reward? I don't know what like win rate that is. Maybe like 33.3%, something like that. But now our statistics are 3 losses, 2 wins, but our account is up $3,000. You good? We're just gonna let this carry on, do its thing. I'm not really looking at a specific trade, but let's say, for example, I don't know, hindsight, right? It's just whatever. We're gonna look for a short position here. Let's go for a stop loss. Maybe try above this high, so that means our take profit is gonna be quite wide, which I don't. Yeah, we're not gonna do that just because it's like whatever. Again, your stop loss and things like that are very important, so just keep them into account. Again, we're risking a 1 to 3. We're going to place this order. We're going to risk 1%, place order, and play the chart out. Oh, really close. Okay, cool. So we stopped out. That's fine. Personally, wouldn't have taken a short position there. And we're going to stop there, okay? Because my camera's running out of storage and we have enough data. So I want you guys to now we've done this. I haven't really looked for trades. I haven't done any technical analysis. I mean, we can look back. This is just a reaccumulation for us to swing this previous pivot high, reaccumulation. Again, I'm a hindsight warrior, so hate me, but that is a long position any day of the week from down here. But our statistics now show us that we lost $1,000, made $3,000, lost 1,000, lost 1,000, made 3,000, lost 1,000. And as you can see, our account is up $2,000 out of these 1, 2, 3, 4, 5, 6 trades with 3 losses and no, 4 losses and 3 wins. Wait, no, 2 wins. So we've had 4 losses and 2 wins out of 6 trades, and somehow our account is up $2,000. How does that make sense? So guys, I really hope you enjoyed this video of me showing you how win rate is not as important as risk to reward, showing you the probability of trade, showing you the simple risk reward analysis. I mean, like I've said before, I didn't look at technical analysis. I just placed a short, like I'll flip a coin. Guys, this is the funny thing with trading. Flip a coin, right? It's 50-50. You either win or you lose, okay? It either goes up or it goes down. If you place the correct risk to reward, you're going to be profitable over a period of time. And I hope this video shows it. And of course, it's only 6 trades and I've shown it's profitable. However, if you do this day in, day out, and you get the data that you require, I wish I could do this for longer to prove it more. But if you get the data for over a longer period of time, you will be profitable and you will be confident in your trading ability.